What if I told you Warren Buffett, one of the richest men on earth, started out making the same investing mistakes that drain most people's accounts today? Back then, he was losing money chasing charts, scribbling technical patterns, trying to time the market. But at 19, one book changed everything: The Intelligent Investor by Benjamin Graham. Inside it, Buffett found three simple rules that became the bedrock of his $100+ billion fortune. And here's the kicker: rule number two alone could have saved countless investors from disaster in 2008. I'll explain that in a moment. First, let's talk about the rule that completely flipped Buffett's perspective. Rule number one: a stock is part of a business. At age 11, Buffett could rattle off every ticker symbol on the New York Stock Exchange. X for US Steel, T for AT&T. Impressive, right? Except he admits that he didn't know anything. He didn't know what was behind the tickers. That's when the light bulb went off. Stocks aren't lottery tickets, they're ownership in real businesses. And suddenly Buffett started asking, what business am I actually buying? What are its economics? Who are the competitors? And who's managing it? Here's the golden formula: value the entire business first, then divide by shares outstanding. If the stock price is way below that number, you've struck gold. So lesson one, stop thinking like a trader, start thinking like a part owner. But that's just the beginning, because even if you know what a business is worth, the market itself is designed to throw you off track. Rule number two: Mr. Market is your servant, not your master. Buffett calls the stock market an alcoholic manic depressive who wanders around all day looking at crazy things. And he's right. Stock prices double, crash, and swing wildly, even when the businesses themselves barely change. Meanwhile, your local apartment building or farm, it doesn't fluctuate 50% in a year. Here's where Buffett's genius comes in. You don't have to play along. Mr. Market offers you prices every day, but you're under zero obligation to act. You can sit for months, even years, waiting for the right opportunity. And when fear grips the market, Buffett says it's raining gold. That's when you put out the bucket, not the thimble. So what's the final rule that keeps Buffett from disaster, even when he's wrong? Rule number three: margin of safety. Picture this: you're driving a 9,800-pound truck. You come to a bridge with a 10,000-pound limit. Do you cross it? Buffett says no. You keep driving until you find a stronger bridge. That's the margin of safety. Never cut valuations too close. Always leave room for error. And only invest when the value is so obvious it practically shouts at you. Now, knowing the rules is one thing. Applying them means knowing what kind of businesses Buffett actually wants. He wants companies with moats, big, wide, deep competitive advantages. He calls it a castle with defenses that rivals can't breach. Think Coca-Cola. It owns a place in 6 billion minds worldwide. No amount of advertising can buy that. He also insists on managers who are honest and capable. As Peter Lynch put it, buy a business so good an idiot can run it, because sooner or later one will. And maybe the biggest secret? Buffett doesn't waste time trying to predict everything. He eliminates entire industries, whole categories he doesn't understand well. Instead, he narrows his focus to just a few bets inside his circle of competence. In fact, Buffett tells students they'd be better off with a punch card allowing just 20 investments in their lifetime. Think about that. 20 shots. That's it. And he says, if you have 5 good ideas in your lifetime, you'll get very rich. So let's recap. Rule 1. Stocks are businesses, not tickets. Rule 2. The market works for you. Don't be its victim. Rule 3. Always demand a margin of safety. Buffett calls this his three-legged stool. Pull one leg away, and the whole thing collapses. Keep all three, and you've got a stable foundation for lasting wealth. And remember this: 5 good ideas can make you rich. Maybe this video just gave you 3 of them. If this video opened your eyes, hit like, share it with someone who needs to hear it, and subscribe for more investment strategies that actually work.